Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of DXY dollar index. My name is Vic. Thanks for joining me here. As we know that the dollar has been actually picking up a lot of strength here, and we have been expecting that. So if you have been actually following my analysis for some time, you either follow me on TradingView or Twitter or YouTube. You know that we have been actually bullish on dollar from this particular point, which was 89.9 level, and I'll post a link to all that analysis in the description of this video so that you can go and check that out. There have been very strong reasons why we were looking for bullish movement on dollar, and around this level here, which is approximately 93 or so, I mentioned that the dollar could actually go parabolic, and the dollar has not stopped since then. It has taken a little bit of pause around 95 area, and even right now around 96 area, but so far it has been not stopping. It has been picking up strength. Doesn't matter what happens on gold and other currency pairs and other markets, the dollar is going in one direction, and it actually breaks through, breaks a lot of opinions and a lot of correlations which people have been having for years and decades, that dollar and gold must go in an opposite direction and all that. A lot of things are getting changed, a lot of things are getting broken. So in this analysis we are going to focus on dollar, and let's see how this market is going to behave. Well, what can we expect from this market going forward? So we know that we have been going long from here. So let me take you back on the journey why we were we were looking for a bullish movement on dollar when everybody was saying that the dollar was going to die and it was going to fall down to 80, or sometimes people were saying that it was going to go to 70. Instead, we were looking for long move on dollar. Why we were doing that? For that, let me actually bring you to this. I posted this long time ago, but I've been talking about this for several months, since last year. In fact, actually, I've been talking about this scenario since last year. So what we have is actually, if you look at the monthly time frame of dollar and you look at the multi-year time frame, what we have is actually a W pattern forming. So we have a W pattern like this, which is not completing here. Instead, it is going to complete around 109, or even higher than that, around 113 or so. So we have this W pattern forming right now. If we look at this particular part, we have this consolidation happening, right? So on right now, what we have is actually, this is where we picked up the dollar strength around 89. What is so special about this level? This level is actually the bottom of this sideways channel that we have been running. This was the top of COVID-19, right? So dollar fell down. What happened? It created this double top at what level? 61.8 fib level right there. Okay, so we have this channel running, and the market has just bottomed and started to go back up. Right now, where we are standing at the mid of this channel. Okay, and it is trying to break through this. If it starts to break through this and continues to move forward, and if it breaks through the upper part of this channel, then we are looking for even higher move into 109 or even 113. But that can take years, because we are looking at monthly time frame and we are looking at multi month time frame. Okay, so that's one scenario. Another thing that we can have is actually, there is another W pattern now started to form, which is this one. So the market is expected to go higher into this. So that's another W pattern which can form. So the dollar can still rise. Now, we always look at the other side of the story as well. We must always see what can go against us, right? So our bias is towards the upside, but there can be another side to the story. So we always should be aware of the other part of it. So what can go wrong? Now, dollar has left few gaps around 90 level or so. So around this level here. So at some point in time, I'm expecting dollar to go higher, maybe from where it is right now, maybe in futures. At some point in time, nobody knows exactly when it is going to fall down to at least 90 level. So it can start to happen right now, or it can go all the way to this level and then come back to 90. So at some point in time, it is definitely going to come back to 90. Why? Because dollar is one of the markets which actually never leaves any kinds of gaps open. So you should be aware that there is a bearish scenario on dollar as well, where it can fall down to 90. Can it fall down to below the previous low or below 90? It is a possibility, but it is not a strong possibility, because of this pattern which is appearing here. So even if it falls down to 90, I'm still going to expect to continue to move higher. Okay, because on multi-year basis this is still forming that W pattern. So this is what we have on multi-year time frame. So we should be aware that there is a chance that it can fall to 90, and when that is going to happen, nobody knows about it. But you will know that as soon as the dollar will start to fall to 90 or so, like in a lot of media, a lot of um, so-called market gurus, they will start to scream and shout saying that dollar is dying, dollar is dying. What you should be doing is rather look at the higher time frames and look for yourself on the charts whether it is actually dying, whether it's happening or not. You see, post COVID, the market was falling down like this was the large move that dollar made, but this is nothing new which actually happened. If you think about it, the same move happened before, and in fact actually larger than these two moves actually has happened before that, right? So nothing is special happening around here. I know that the purchasing power and all that, inflation and all that, that's in there. But if you just focus on the chart, on the technical stuff, on the DXY analysis, then this move was nothing. This is similar, and these two moves are nothing as compared to the previous one. So it's all in the market, it's all part of the game. It's all in the technical analysis. So what we can expect, I can expect dollar to continue to have strength and reach a certain level and then probably start to fall around 90 level. If it doesn't fall, then it will continue to go into even higher area, and maybe after that it will start to fall because the W pattern will be complete, and when W pattern completes, the market is expected to fall. So this is the higher time frame that we are looking at. Okay, now let's go and look at some of the other scenarios. Okay, let's look at give me just one second. Where are we? I've seemed to have lost that link. Give me just one sec so that I can open that. Okay, uh, here. Right, so we are here. So this is the chart that I've been presenting, and remember, these yellow lines are possible gaps. So market can actually fall down all the way down to 90.48. Always remember that this thing, if you are bullish on dollar, then this can actually bring it down at any moment in time. So right now, what we have is that market is struggling with these FCP zones, and we found these FCP zones months ago. Why? Because we had complex W pattern here, and this W pattern can also be thought of, if you remember, I presented that this is kind of inverse head and shoulders pattern, and this trend line, this neckline has been broken, and that's why the dollar is expected to rise even higher to near about 98 area or so. Another reason for this is not just this W pattern or inverse head and shoulders, but because of few other things which can also lead dollar to actually rise even higher, and that is the formation of even a bigger W pattern. Now this actually brings it to near about 98. There is a gap available around 98 as well. So all of these are actually pointing out that it can actually go higher into 98 area or so. But right now, what we should do is just trade what we see, right? So even if my bias is towards the upside, I'm aware that there is a downside to this as well. If it starts to fall down, then these gaps can be closed, and we are right now in an FCP zone. Now these FCP zones can act as kind of resistance, support, or they can actually attract the price towards them. So because we are right there in this FCP zone, and market has been kind of consolidating, it has been showing rejections and all that. So if you are looking for a long on DXY, you should be looking for a confirmation above this FCP zone. So ideally, your confirmation should be above 96.789 to go long on, and the next target will be the next FCP zone. If you're looking for a short, you should be extra careful, because right now, even though this is consolidating in FCP zone, this is not looking bearish right now. So ideally, your confirmation too short should be around 95.971 or even below than that. So if I get a confirmation below this FCP zone, then only I will look for a short. If I go and take a trade, if I get a confirmation above 96.789, then I look for a long. Right now in this area, you can play only short term trades, but you cannot go for like you know swing trades. So in here in this zone, as you can see, the market is consolidating, And when the market is consolidating, that becomes a breeding ground for WNM patterns. There have been a lot of WNM patterns in this area, and if you want, you could have actually played them, because the best thing about these WNM patterns are they are highly profitable and they're highly predictable. The predictability is very nice, and we can actually, we can we can quantify them using Fibonacci, right? So FCP patterns, WNM patterns can be quantified. You will know with good predictability, good accuracy, where they are going to complete and how you're going to, take the entry, where is going to be a stop loss, where is going to be a profit target. So just to give you an example, we have a larger W pattern here, and that's why when the W pattern completed, the market fell down. Now what is happening right now is market is going up and creating another W pattern, and that means the market is expected to fall once again. So these sort of things can happen. Okay, there was a gap left around here, and market came here to close that gap up. So if you knew that there was a gap and there was a W pattern happening, you could have actually played for a long and then short from that side. So that's how you can play. So right now, if you're looking for a swing trade, as I said, you should have a good confirmation at least on daily basis above 96.789. And if you are looking for a short trade for a swing trade, then you should have at least confirmation on daily basis below 96.71771. Yes, right, it is still bullish and it can continue to stay bullish. And yeah, one more thing, um this is the zone, this is the level where I said, dollar could go parabolic. If you can, if you have been following me for some time, then you might have seen me posting that. Otherwise, you can, find out in my on my social media channels or Telegram channel. By the way, that is completely free. You are supposed, you can, you are welcome to join that free Telegram channel. So around here I said, the dollar could go actually parabolic. Now this is the same kind of situation which is happening around here. So if the dollar starts to show more strength, then it can go parabolic once again. And that is why if you're looking for short, then you must have very good confirmation below this, right? And so this is also setting up a condition to go for a parabolic move, which can push it to 98 or even, above 100, or above 100 will be a psychological level. So if I'm long on here, then I will be very careful around 100, because that will be a psychological level for dollar. Okay, remember we have been long from 89. We have been, bullish on dollar from 89, and it has gone all the way to 97 level air here, irrespective of what media said, what gurus said, what other people said, right? So just focus on your craft, build your skill, and focus on your craft. Just build your confidence in the system. That's how it should be, right? Remember, we are approaching the holiday period and towards the year end, so there can be a lot of spikes, there can be a lot of stop loss collections, there can be a lot of, unexpected things. So my advice to you will be expect the unexpected in the markets, because your your technical analysis or your expectations may or may not be valid in these conditions. Manage your risk and always trade what you see. Okay, be very, very careful and stay safe. I'll see you in the next one. Have a great trading week next week. Thank you for watching. Find and follow us on these social media channels.